Okay, with 02.10 we start with the finalization phase of the engagement. Now this is a summary of identified misstatements, and it's actually a document that you can continuously document information in as the engagement progresses. So as soon as you find a misstatement, come and immediately document it in the summary of misstatements, because here we need to go and we will put in account number. We do have drop downs which incorporate all of the account numbers in the file, or if you need to create a new one that's not yet in the audit file because it's not necessarily documented or changed by the client, you would need to go and give that information. So there are my two accounts. What AFS category does this fall under? So this is a profit and loss account. This is a asset account. What's the component that it's linked to? Revenue, trade and other receivables. And what's the amount of the difference? So basically we're just building the journal here. Is it a current or prior year adjustment? And the reason that question is here as well, you need to bring adjustments in from the prior year if there are any unadjusted ones in the previous year, to be able to assess materiality of adjustments. Give it a reference. If I start a new journal, you'll see as soon as I put a new reference in there, it puts a slightly thicker line just to make reading a little bit easier. Now we again assess quantitative materiality. There's still a question around qualitative materiality. Is it material basically at the end of the day? And remember, qualitative materiality, if it's fraud, then 10 Rand is qualitatively material and you need to mark it as material. Has management agreed to adjust this amount? If they have said no, document that fact. If they say yes, then it won't go through to our unadjusted differences. And then go and just document the nature, the causes of the misstatement, as well as reasons for not adjusting these amounts where applicable. Just go and document relevant information around this adjustment. If there is not something separate that you need to document in each line item, then just simply say as above. That'll get rid of the yellow cells. Once you've documented all of these items, it will go and aggregate the differences for you per component for current and prior and in total, per financial statement section, and it actually looks at whether or not on a line-by-line basis per financial statement area if it is a material difference in aggregate. Then we have questions about reviewing the uncorrected misstatements with consideration of those that have been adjusted by management, as well as the estimates tested throughout the engagement. Is there any indication that management is using estimates and maybe even choosing which adjustments for us to process in order to bring bias to the financial statements? Is he trying to overstate or understate something by agreeing only to certain adjustments and by performing certain estimates with bias throughout the financial statements? If we say yes, document. If we say no, just document details related to that assessment. It could be not applicable. If you say no, there's no management bias here. If we're saying management has been biased, we then document information and we go and say, well, based on this bias, do we think that as a result management might cause these financial statements to be materially misstated? And if so, go and document additional procedures and say where you have documented that evidence. If no, we can simply just go and make those no's and we can move on. At this point now we want to go and consider the materiality in conjunction with the errors noted and those that have been adjusted, and see if there's any indication that materiality may need to be revised. If it does need to be revised, pop into the paragraph 44 template and go and revise your materiality. If we say no, it's not necessary, great. If we say yes, go and do the necessary. Okay, and then we go and give a conclusion. There are no uncorrected misstatements. Hopefully that is often what you will use. Or we can say uncorrected misstatements exist. but they do not result in a known or likely material impact on the financial statements. In this case, I can't say that because there is a known or a likely material misstatement that is happening here. And document known or potential impact on our report, we can go and say here that we are going to have to modify the report because of material errors. Okay, that is a summary of identified misstatements and is the first step of our finalization.